questions asked of them. And you know, pointing out, talking about scams, I mean, I really like your example there of the honest ICOs. But, you know, it's important to realize even those ICOs can be dishonest. You know, I actually ran one of those about maybe 2 months ago, where I went and basically, you know, had a tweet and figured it was, you know, the minimum viable product. Of course, which you go tweet a Bitcoin address and ask for money. And of course, I made the usual honest promises that I'd give them nothing in return and so on. And the fact of the matter is I defrauded everyone. I went and sent all that money off to my open timestamps project to go run servers that are a public good. And, you know, I promised that I'd spend it on like hookers or something. So, sorry guys, I kind of lied there. And given you did mention open timestamps, I'll say it's a very boring project to go and make timestamp proofs. Something I actually started in, let's see, I guess it would be like 2013 or so, prior to anyone knowing who I was, or me really knowing what Bitcoin actually really was that well. And that was actually my way of understanding the tech details, going and making that project go work. And like Giacomo said, you know, about a year ago, well, I kind of got frustrated enough by people not doing the really boring job of timestamping properly, and figured, you know what, I better actually go make this thing work and make it production ready and so on. And I think we're pretty much there. And long story short, if you want to prove something exists at a certain point in time, and you want to do it cheaply, open timestamp's the way to go. No ICO, no nonsense, it just works, and that's kind of that. I'm sure it will work better in the future, but it already works pretty well, so that's kind of that. And as promised, let's get some questions on what the hell is going on with Bitcoin right now.
So I'd like to ask the first question. What's the project Giacomo told about? Are you working on something scalability you want to share?
Yes, I am. And yeah, this is something I've kind of been working on and off since, well, probably like 2014 or something, for actually colorcoin tech. And you know, I had a client who wanted a better color coin to go fix some issues, and I realized as I was working through this stuff, I mean, first of all, why are we like bolting something like color coin protocol with, say, assets and so on to the idea of Satoshi? You know, why do we have this idea where we'll say Satoshi's colored and we'll, you know, mix it all up with all this consensus? And I realized, you know, all we actually need to do is just commit to a state. Say that, you know, and I want to go and give you a gold token, a fake gold token, that will probably never get your real gold back. All I need to do is ensure that there's no way for me to double spend it. And, well, how do I do that? Well, I mean, let's go back to what's signature. Signature is just a way of saying this message came from this person, or if you want to get really technical, this thing that had access to this secret. And signatures are all well and good, but signatures don't tell you if a different message exists for the same purpose, such as the message that says, hey, I had gold, now he's going to have gold. So I figured, why don't we go generalize this? Why don't we call something a little more sophisticated called a seal, which is, say, it's kind of like a signature, but you only use it once. Now, if you've ever seen like a shipping container, for example, somewhere on the you know, shipping container, you'll see like a little tiny bit of numbered zip tie. And that's kind of your real world analogy. It's this thing, you can close it once, and it has a unique number. Now, if I had better props, I'd go start making little zip tie chains. But, you know, that's essentially your model. Start off with something, and you can keep adding chains to it. And because they're one-time use, once you go and create that chain, it's irrevocably secured. So the question is, all right, how the hell do you make a seal? Well, Bitcoin transaction output's a seal. If Bitcoin works, I can spend the transaction output exactly once, and spending it is an irrevocable thing. Well, if I can then do that and then commit to my data, now I have a way of doing a color coin protocol where I can make up the rules and make it whatever I want. And then the other thing I realized was, all right, how do we make this stuff scale? Well, if I'm sending Giacomo a bar of fake gold, why do anyone else in the world care about that? You know, if I'm going to send Mir a bar of fake silver, she doesn't need to know that Giacomo got a bar of fake gold. Well, right there, that's good scalable improvement. I mean, every time you can avoid sending data to everyone else, that's an improvement. And I can still convince Giacomo that he got real fake gold, a genuine imitation, by giving him all the data to show that these seals were sealed properly and so on. And once you have that, well then you realize, well hang on, how can I go implement a seal? Well, if I'm going to be really boring and work in fintech, like the sellout loser I am, if I have a bank, I can easily go set up trusted intermediaries who just go make the claim, yeah, we made this magical seal thing happen. And we can go audit them with fancy things like blockchains. Blockchain, by the way, is a chain of blocks, not like magical pixie dust. And I can audit all the servers with a chain of blocks, and now I can go and scale something. Well, long story short, I actually wrote up a big chunk of that in Python. And when R3 was trying to go figure out, well, how do we go and take our expertise at convincing people to spend money to find someone who will actually go make the software for us, they hired me as a consultant to go and figure out, all right, which of these projects make any sense? And as often happens, my advice there was, yeah, none of these projects make any sense. They all suck. On the other hand, I have this thing called proof chains, and they're like, oh yeah, seems like a good idea. And we ended up putting that into kind of the basis of R3 Corda, although I ended up not being at R3 for much longer after that. And this is kind of the latest attempt at doing this. Now, half the audience probably doesn't care about any of this, but I will say, I think we can also go pull this off in Bitcoin, which is to say that if we can implement a seal in a decentralized way with mining rather than with some magical boxes at a bank, then we have a reasonable chance of actually scaling Bitcoin on chain. And I know RBTC tells you all of us Blockstream shills hate scaling on chain, but actually it's basically the only thing I've been interested in for pretty much my whole time in Bitcoin, because I looked at Bitcoin and said, yeah, that's not going to scale. I wonder if I can make it scale. So hopefully one day it'll go there. And in the meantime, maybe we'll get money out of banks and make better databases.
Is this idea somewhere online we can read about it? Or?
Yes, if you go to my blog and go to, what do I call it? Introduction to the State Machine Approach Consensus. And if you've heard what a state machine is, this is basically the idea. You have states, and you transition between states, you prove the transitions, and you make the states irrevocable with the seals. I don't think I have the word proof chains or proof marshal or any of that in there, but it kind of gives you a basic idea. And I'll say, it's not necessarily a new idea either. I think it's just that if you're an academic looking at this, figuring out how to make a blockchain scale is way more interesting. Because it's far more interesting math than, why don't we just throw servers at the problem? But, I've got a fine arts degree, so I have to do the thing I can do, which is throw servers at the problem.
Another question is, are you a Bitcoin maximalist, as they say, or do you think that there will ever be an actual reason to have separate coins? Like, for instance, in coins, like if I got the name coin example, is there any reason to have that in a separate blockchain? Or, now with side chains and stuff that are going to be implemented, would there be any reason to use a separate token for that?
Well, we're almost in Europe. And I noticed that inconveniently you guys have different money than when I was in Milan. And that's a giant annoyance, which meant I wound up using my Visa card for the first time in a few weeks earlier today. Because I ran out of this weird little cash things that you guys apparently do. And that's precisely why multiple currencies kind of suck. I just want to go pay someone. In fact, this whole Bitcoin thing kind of sucks. Why can't I just send someone a Canadian dollar? Why can't I just send someone a bar of gold? Well, there's good technical reasons for this, but that's precisely it. They're good technical reasons. They're not good economic reasons. Every time you add another currency, it just adds friction. And yes, sometimes there are good reasons to do otherwise. I think if I went and mentioned the euro around here, I'd probably get 5 or 10 economic experts who would have various opinions on how good of an idea the euro was. But from the point of view of the consumer, the euro is definitely a good thing. No matter where I am in Europe, other than this place, I can go and pay without having to convert currencies. Why?
Because euro is highly inflationary, and the consumer is losing value. So,
but what if I fix the euro? I mean, that's a design flaw. It's inflationary.
Wait, it's not a design flaw, it's a policy. It's basically how states shed debt. They make it inflationary because they took your money.
Well,
and
but to be clear,
so they inflate.
In my example, I would say taxes are a design flaw. And I think you're quite right. I mean, that is a tool states use, but I would call inflation a very clear tax on savings.
So ostensibly, it's a nice feature to have that you can pay with your own currency, okay? But you're locked in. So the Swiss at least have a choice to have their own monetary policy.
Okay, but then
and not be tied to this disaster.
But then let's go say, I mean, obviously that's a possible technical issue. I may want to go and choose a currency with less inflation. But if I already have a currency with very little inflation, why am I going to pick a different currency with very little inflation? For my particular set of goals, which might be buying drugs over the internet, I will probably go find the best currency for that purpose. And once I find that, there's very little reason to make another currency. I think this is what so many ICOs run into, because they are essentially different currencies.
How about something like Monero? I mean, Monero came into existence to basically provide some privacy to the user of cryptocurrency. So it has its own data.
Well, I'll say very clearly, if Monero could be implemented without a separate currency, it'd be better. I mean, this was the whole idea behind Blockstream's merge mine sidechains. I mean, sidechains in general. There's a couple different types here. And the only reason we don't see them is because I and a few other people said, hang on a second, this merge mining thing isn't secure. And contrary to popular belief within the Bitcoin dev community, no one actually agrees with each other that much. And we argue like hell, but you just don't hear about it because we're actually kind of nice to each other. And long story short, these merge mine sidechains haven't happened yet. Precisely because we found technical problems. But had that not happened, I think you would go see a sidechain with, say, Monero's ring signatures already on Bitcoin. You'd see a sidechain with Zcash. And if you take that and compare it to the status quo of having a different currency, it's obviously more efficient, more convenient for the user. I mean, I end up using Zcash as an example for private purchases. And I have to do, 2 transactions when I could have done 1. And it just takes me longer. That's just less convenient.
So just to follow up on this, Monero, for example, even if there were already sidechains implemented, it wouldn't have started as a sidechain probably because there are non-zero costs associated with adding a sidechain to Bitcoin. So if you want to start a separate, like some use case with a token, you would want to first perhaps test that it actually does have a value before adding it to a sidechains. And then you end up having Monero with its own
But let's be
network
clear.
effect.
You're talking about technical limitations. In a hypothetical world where we didn't have those technical limitations, we would not have a reason to make Monero a separate currency. And I suspect in the long run we will get rid of those technical limitations. I mean, the work I'm doing with this proof chains, proof marshal stuff is an example of the type of new technology that could make these limitations go away. Similarly, even if you do need a token for technical reasons, you can always make it effectively a two-way peg by the simple thing of making, if you want the token, you provably destroy Bitcoins at worst, wait a bit, and then you get your token. If you want to get it faster, you can go and just trade it with someone else. What that does is it creates an economic peg, which at least makes the price volatility go away, for the most part. And right there, in many cases, that will be a better token for people's use cases. No, I just want to go pay someone. On the other hand, my use cases, I don't have money to go pay programmers or myself. or to go party in wherever the heck you guys like to party, then yeah, of course I'm going to start a token. How else am I going to get a ton of money to go come in so I can go party? But, you know, that's not a good thing. I mean, you know, and I think it's unfortunate we have this conflict of interest between what people would like to do, which is get a ton of money, and what people should do, which is actually write good software.
So you're saying basically that my assumption that the cost of pegging a sidechain is non-zero is not true. It's going to be zero.
Well, I'm not saying that. I'm saying that as technology improves, we will get closer and closer to there being no friction there. And in many cases, we are a lot closer than I think people realize.
Well, since we're all hating on the tokens, I should ask some token questions. What if you had this single currency that could do everything in the world called Bitcoin, but you wanted to have a token that its utility has a complex, results in a complex set of actions across multiple accounts. So if you want to, yeah, you have state. So and the tokens provide you some utility. It's isolated from the other economics of other systems. What are your thoughts? Yeah, what are your thoughts on, we'll just make it simple. What are your thoughts on things like, by the way, full disclosure, I worked on Ethereum, I work on Golem, so on and so forth. So what are your thoughts on utility tokens where, yeah, app coin tokens, I guess, where they allow you some utility based on your spending of them and things like that?
Well, I mean, I think I've shown how, first of all, you can get rid of the monetarily different token aspect of this with this provable destruction method of, you know, creating a two-way peg.
How do you do that atomically together with the state change of the application? See, I think this is why a lot of things are built on Ethereum, is because you can atomically do a debit and credit dependent on atomic execution of some logic. And that's where I think, yes, you can separate the money and the economics from whatever the technical function is. But if you actually need the technical function to be atomic with the money, then I guess that's what I think is interesting.
Well, I mean, I think the thing I would first say there is give it a specific example of where this is, you know, what exactly you're trying to do. Because I've had a lot of people kind of hand wave around things that Ethereum can do, but very rarely do I see very concrete examples of some clear use case that they're supposed to actually go do. And in particular, those kind of clear use cases that actually need a separate token. I mean, particularly like with Ethereum, it's interesting to me how Ethereum should be the ideal platform for creating applications that the monetary part of those applications is done entirely in the universal currency, Ether. Yet that's not what happens on Ethereum. Everyone's off creating app coins on a system that's already kind of an app coin. So why did we do that exactly? It's not really clear to me. But how does adding a coin to it make it any easier to use?
Well, is it easy to use Bitcoin?
Well, I mean, is it easy to use any of this stuff?
I think that the difficulty of using Bitcoins is just the same as using an app coin.
But again, I'm asking a slightly different question. Is adding an app coin to this type of system on Ethereum easier or harder than just building the system without the app coin? I mean, obviously, if you have an app coin, you're going to have to maintain the state of these tokens separate from Ether. You know, obviously, this is going to add more complexity. You know, how does that make your life easier? Other than, of course, having money to go and pay rent.
Because I don't think you can do that atomically.
I mean, why couldn't I go trade Ether for some action in my smart contract system Atomically? And why does adding that does that make things easier?
Well, it's a very technical discussion, but if you say, well, I'm going to trade this coin for that, and as a result, there's going to be a state transition in this computer software over here. How does the computer software over here know that the transfer occurred at the same time that the transfer system over here has confidence that the software executed?
But
so I think
this
that
is Ethereum. It's a global consensus.
Right. This is
what
makes it.
Ethereum here.
I guess
Ethereum
this
is
is
global consensus.
Yeah. So this is what makes it easy to build this software on Ethereum, and it's hard to build on another system.
Oh, no, I think you're missing my point here. I'm saying,
think, yeah.
once you've chosen to use Ethereum, why are you adding an app coin to this? Because Ethereum is supposed to be this ideal platform to make all this crazy cool stuff. Yet people add app coins to this platform, which is already ideally suited for that kind of quick prototyping.
Yeah, and I think
but if I'm an Ethereum maximalist, why do I care about using Ether? Like if I'm not a maximalist about something, I should be totally happy to go use it. It's only if I hate Ethereum that I would not go use Ether. And I'm going to end up using it anyway, because I'm going to end up paying gas to do transactions. So.
I like your argument that you don't need some of the coin, but you can't avoid greed. So I agree that there's a lot of greed, and people want money. But the people who are funding these tokens are Bitcoiners. So why are they funding? Why is the market funding these coins if there is no economic value in it? So that's the first counter argument. Second is, going by your logic, nobody should raise any other coin. That means you believe in Ethereum is panacea to everything. That may not be true, because take the example of Giacomo's coin, which was EUS, the imaginary token. So they raised $200 million on the Ethereum token, but now they're claiming to build a superior Ethereum or a superior alternative to Ethereum. So while you leverage the opportunity to raise as much money as you can with the coin, you might have aspirations to build something of a better alternative.
Well, I think you kind of answered your own question there, at least what I would have said, which is, I mean, you've given an example where my real use case for building a token is to find a way to raise money. You know, I mean, ultimately that can be very dubious. And I think there's a lot of examples with tokens where we know that the moment this stuff gets successful enough to kind of matter, or even do the initial bootstrap, if the token actually adds, you know, or if the token actually adds any real cost, which it always ends up doing, why wouldn't someone take that code, just take away the token, and go reboot that? You know, I mean, I think it's tough to, you know, rule that situation out. Except in, you know, some rare cases like things like namespaces, where there is a very strong social consensus to it. But namespaces is just kind of one application. There's many others where none of this stuff's true. You know, I'm not going to make, say, another token, say, build a Lightning network type thing. Because the moment Lightning is useful, obviously, I'm going to go copy it for any currency I happen to have for whatever reason. I mean, if I had, you know, a central bank-backed euro token that was compatible with Lightning, I would definitely go and port Lightning tech to it. You know, you can't keep that technology from spreading there, which makes, you know, me as a tech guy asking investors to send me millions of dollars for such a dubious premise not really something I want to go do personally. You know, it sounds like the sort of thing I wouldn't want to be up in court talking about, for instance. I mean, I'm not denying that having money is nice for progress, but I mean, again, like this isn't a question of whether or not having money for progress is good or bad. This is a question of whether or not you as a developer should go down this road. You know, I mean, I could go find progress by going off to the local kindergarten and beating up kids for lunch money.
All right. Let's switch the topic a bit. Peter, thanks for putting your name behind the user-activated soft fork. I really appreciated that. And I want to talk about forks and governance a bit. And my thoughts on this are, when it comes to the miners, I think the user base somehow suffers from a bit of a Stockholm syndrome, like, oh, the miners are securing our money. But to me, the miners are really the people that, in case there's double spend, in this rare case, just look at the number of transactions, most of them are not, they get to say something. And so to me, they're basically the court system that we sometimes turn to, but for the rest of the transactions, they're kind of just there because the protocol implies it. Yet they get to say a lot about how you run the ecosystem by, through bit 9, with the version bits, they get to signal how the system is run. So the miners really are the ones signaling for technical measures. The user-activated soft fork, and just by crafting a transaction, I don't have this technical capability as a user to say something about the rules that I want to have applied to my transaction. So there's no kind of opcode to say under which, if there are two forks, under which my transaction should be parented. So there's basically no replay protection. So the user base can't say anything, and I would want your thoughts maybe on how we could change that. Maybe introduce a scripting extension or something, or if this is even feasible. And also talk about Bitcoin core devs. When you follow the IRC conversations and your internal discussions that sometimes surface, there doesn't seem to be really a unified opinion, which is okay, of course. But sometimes, at least from my perspective, I would want some more guidance in the terms of some people that I know personally have voiced their opinions, but when it comes to saying it publicly, very neutral, like we are this neutral body and the user can set the flags on his Bitcoin D however he wants and then kind of make up the rules. So I would wish for a little bit more guidance and a bit more strongly opinionated in a unified voice on Bitcoin Core for kind of things like user-activated soft forks.
Well, I mean, first of all, for the question of kind of miner-led governance, there's actually a lot of interesting potential technology we could deploy in the future. And I think Adam Back probably deserves credit for talking about it first, which is the idea of if miners don't have access to transactions, their ability to influence how the protocol works is vastly reduced. And Adam Back proposed something he called encrypted transactions, where essentially, long story short, is your transaction would be encrypted. It would end up in the chain, but with in such a way that you couldn't actually see what it was, other than maybe like one input, say pay a miner fee or something like that. But the vast majority of what inputs and outputs there would be entirely encrypted. There'd be no way to actually view that, unless of course you're the recipient. Because if I'm going to go send some bitcoins to Mira with one of these encrypted transactions, I can still convince her that the transaction is valid by giving her the decryption key. There's a bit of nuance exactly how all this works, but I mean that's essentially true. And in that kind of scenario, well, if miners are not the ones able to validate the rules prior to when the transaction is committed, then how are they going to enforce anything? Their ability to enforce the rules becomes much more distant. And in my work, I took that to the next level, which is I came up with this idea of client-side validation. Why should any rules be enforced by miners? Why should miners do anything but create an append-only log of data? There's an interesting thought experiment, which is imagine if the Bitcoin protocol allowed blocks to contain invalid data. Now the question is, would Bitcoin work? Well, if you're all running full nodes and you all apply the same rules consistently, even if blocks are allowed to contain invalid data, whatever garbage you wanted, we could all come to the same consensus and send money to each other. Because after all, our clients can validate those rules, figure out what are valid transactions, reject the bad ones, and come to the same consensus on what is the state of the currency. And in that kind of scenario, because blocks are specifically allowed to contain whatever they want, miners have less of a role. Now, without the encryption side of things, that sort of naive scenario still allows miners to censor, which still allows them to create soft forks, which then allows them to exert control of the rules. But we can go a step better, which is if we're doing things with these sealed concepts and passing transaction history from one person to another, long story short, it turns out you don't actually need to put nearly all the transaction data published in a chain at all. You know, I can go and prove that I can't double spend something with much less data than the full transaction. You know, why I can do this is a bit technical, which I won't get into, but long story short, this is basically true. And if you design such a system, all miners would see is, well, somebody spent a coin, maybe. I don't really know what happened there, but there's some data I published, you know, so on and so forth. Yet I'd still be able to convince the next guy that, yes, these coins are real. Of course, the problem with all these systems is now your need for consensus is way higher. See, in Bitcoin, because we have miners enforcing rules, if you or and I have slightly different rule sets, it's a lot less likely for that to blow up in our faces, because the miners all kind of come to consensus. You know, that consensus is incentive backup for us having different rules. Whereas in these client-side validation systems, if I can convince you to accept a coin with slightly different rules than someone else, you are now economically forked from the entire system. You may want that to be true. You may want to have it a fork, but if you didn't want that, I may very well defraud you. You know, due to technical reasons, usually when that kind of situation is possible, I can still spend the original coin. So, from a software engineer's point of view, yeah, that's actually really scary. You know, how the hell do we get every single wallet to have the exact same rules reliably, even though some of them might be on, you know, an Android phone, some on an iPhone, some on a Raspberry Pi, some on an Intel system. You know, there's just such diversity there, and frankly, I mean, we struggle to get Bitcoin Core to reliably agree with itself, you know, version to version. To take that hard problem and expand it 10x isn't going to be very easy. So, you know, there's kind of what I'm kind of researching on, and what I probably will not succeed at solving, maybe someone else will. But, you know, maybe in 10 years, this is how you'll use Bitcoin, or whatever we call it then, maybe 2x coin.
May I follow up? Is there any intermediate step with the current scripting language where we could express our views as users more, sort of force something on, have a voting basically that we have with Bitline for on a transaction level that makes sense
I think
in some
the
way?
hard thing about this is a lot of these systems create opportunities for miners to meddle with the process. You know, you could imagine a mining pool saying, if you don't vote the right way, I'm just not going to mine your transactions. Yeah, that's a pretty powerful coercive effect. But, you know, like I say, it's a pretty strong coercive effect, and it's an ugly problem with an easy solution. You know, and really what we want with money is for us to just all agree on some boring thing and all just use it. You know, we don't want all this drama. And the moment you create opportunities for people with ulterior interests to create drama, they will go do this and continue to go wear down the people trying to just defend the status quo. And in many cases, the people trying to go do this have a lot of funding, a lot of incentive, and if, you know, they can say bribe some miners to go and reject transactions, I mean, it's a hard problem. It creates ugly social things. It'd be great if some altcoin did it, though.
I have two questions of a more practical nature, less kind of technical. One, what would you estimate is the probability of Bitcoin Cash successfully forking on August 1st? I'll let you define successfully. And two, what would you estimate the probability of the 2x part of SegWit to happen in a couple of months? Is it more or less likely than hell freezing?
Well, you let me define what success is, and I will say from the point of view of the people who created Bitcoin Cash, you know, via BTC, they probably already think it's successful because they've been able to go set up a trading engine that can go trade Bitcoin Cash in the future tokens against, you know, frozen Bitcoin tokens. So in a sense, yes, Bitcoin Cash already exists. It didn't even need to actually activate to exist, and they're earning money off, transaction fees and so on within their exchange from people trading this stuff. So I'd say it's great success. Now, if you define success as people being able to make Bitcoin Cash transactions after August 1st, then again, I would say they have nearly 100% chance of success if they actually want to be successful. Because all you got to do is throw some miners at it. And the way they've designed Bitcoin Cash is that the difficulty to create a BCC block rapidly goes down if no one's creating BCC blocks. So very quickly it'll get to the point where, yes, they can go create blocks regardless how many miners actually use it, and they'll have a currency. Simple as that. Now, is this currency going to be, say, valuable? Will it be secure? Will it be 51% taxed? I mean, that all gets a bit complex, but if there was demand for it, then yes. I think it would definitely exist. It's easy to create that scenario. I think their big problem is simply the demand side, which is, why would you want to own Bitcoin Cash? Even on their own exchange, last I checked, the ratio price-wise of, Bitcoin Cash to Bitcoin is like 10 to 1. Or 1 to 10, I should say. I can't do math. Obviously, the market's saying, this stuff isn't very valuable, and that's at a point where very few people are getting into it or trying to go sell it. And when you have to freeze your money off on some dubious exchange, once this actually goes live, I think it's going to plummet even further. Now, let's ask the same question for, say, SegWit 2x. Or really, I should say the 2x hard fork. And I think that's a lot less settled. I mean, what can happen between now and November? And we're in a position where you have a lot of big players who put a lot of their social stakes saying, yes, they will make this happen. So I think the question there is, how likely is it for these people to back down? Because we've already established if they really want this to happen, they can set up hard fork rules that make the 2x coin exist. They can certainly pull this off technically if they know what they're doing. And I think they're sufficiently competent to do this, because that's why they just copy Bitcoin Cash at worst. But will they succeed? And I think what their goal is to make Bitcoin be this 2x coin. I mean, I think we're just kind of getting started in what that social fight will be. And my suspicion is, if past performance is any indicator of future successes, they will fail at this. Because they just can't seem to go attract competent devs to actually work on this stuff. I mean, the reality is, Jeff Garzik has made mistake after mistake after mistake in trying to go pull this off. They don't even have enough resources to update the README to say, BTC1 rather than Bitcoin Core. And the reality is, I mean, this is just a hard thing to go pull off, because the sort of people who are competent enough to do this work are relatively rare. There's a lot of demand for them. And if you're talking about the ones who really don't care what they work on, they're working at banks. Because banks pay a lot of money. I mean, this is why I do most of my work ultimately for banks. I'm not that good at getting paid a lot of money, but it's better than I am at getting paid to do Bitcoin Core work. I think that's what happened with Mike Hearn. He got sick of never actually getting very far socially in Bitcoin and figured, you know what, I might as well just work for R3 and make a ton of money. And I know what they pay there, and it is a ton of money. It's very high incentive. And there's tons of people like him. Now, for the people who are a bit more ideological and want to actually work on something that won't pay as well, why would you want to go work on something that's obviously not that great an idea? I mean, anyone who understands the system will go say, going from 1 megabyte max to 4 megs, because that is, after all, what the block size increase in SegWit is, maximum 4 megs, which is frankly a little crazy, but the ship sailed on that. And then doubling that yet again before you really realize what actually happens to the system. It's kind of crazy. You know that's probably going to blow up in people's faces. So why would you want to be a part of that? And I think that's why they can't get people, because no one wants to go put their name on that. Now they can get people who will say, do a little bit of work that happens to say help SegWit. I mean, this is why BIP91 exists, because James Hillard, in conjunction with some other people, said, all right, we can take advantage of the situation and get SegWit. You know, and that was a very, I mean, SegWit wasn't going to happen with SegWit 2x. Was some of the initial plans were to be right at, you know, when the hard fork happened and so on. Long story short, you know, it took a bunch of engineering work and a bunch of social engineering work to get SegWit with BIP91. But now that we've gotten our benefit out of this whole process, I mean, why would we help them further? You know, and if enough people don't help them further, it's just a matter of time before they trip up and make more mistakes. And then you know, frankly, the social media flames go on, and people realize, no, these people aren't competent enough for me to want to put $40 billion on it. You know, this has happened before. It'll probably happen again here. And come November, what is it, 12th, it's estimated to be these days, I think. Chances are, some people try to call it Bitcoin, and you'll end up with the market, and the 2x side of it will be worth less than the other. And it'll probably continue to exist for a long time, but, you know, will it be what people think Bitcoin is? I'm guessing no. But I could be wrong.
Okay, so I have a different question as well. So if you would like to secure your Bitcoins much more than a hardware wallet, how would you do it?
More than a hardware wallet? Well, I'd probably start with a hardware wallet and learn how to program and get the right hardware to go reverse engineer my hardware wallets and so on. And I mean, you know, that's kind of your answer. Hardware wallets currently are one of your better options, and it's actually really difficult to go set up computers and be sure that they're actually secure. You know, I mean, I had to do this for the Zcash trusted setup.
Yes, I read that. So what would you prefer, a hardware wallet or your setup? What do you think is more secure?
Chances are most of the time a hardware wallet. You know, I mean, part of my thinking with the Zcash trusted setup was that yes, I will probably fail at actually ruling out all the possibilities in terms of that system getting backdoored. But hopefully at least we'll have enough evidence that will make possible adversaries not want to take that risk of getting caught. Because after all, they did get, you know, someone did get caught hacking into a journalist's cell phone there. You know, they screwed up and set up some kind of weird audio loop, and it was very clear something very strange was going on. So, you know, they screwed up there. But, you know, how do we reliably get that system into a known state? I mean, there's just so many ways to hack modern computers.
Do you know about the Glacier protocol? Have you read it?
Glacier protocol.
It's a 90-page protocol of setting up, like storing Bitcoins, and it starts with having two computers that are offline.
I have heard
computers
this. Yeah.
Online. And for me, it looks more trustable than hardware. That's why it was interesting.
I mean, I used to go and design analog electronics for a living, and also digital electronics, and I mean, maybe I'm a little biased there, but when you compare, you know, a modern computer to a hardware wallet, the hardware wallet's a lot simpler. And simpler is better.
How do you know which to trust from the hardware wallet?
I mean, both can be backdoored, but the point is, the simpler thing is less likely. You know, ultimately, the same problem exists in both cases. How do you know that you set it up in a sane, safe state? And if there's less to go wrong once you set it up, it's probably going to be more secure. But, I mean, the flip side of this is, well, who writes the software for hardware wallets? You know, people who spent a lot of their life learning something other than computer security. And like it or not, chances are those people aren't quite as good at crypto as people who only ever did crypto. So that may balance things out in the end. But then again, I mean, a lot of hardware wallets, they can go run libraries that are the exact same as what's on software wallets anyway. So, you know, I'm not sure there's that much of a difference there. And again, simplicity is always a good thing. So, of course, me personally, I go run join market and spend money on making my Bitcoin point on this. So, but, you know, I'm not a Bitcoin exchange.
Cool, thank you.